Welcome back to the Building Wealth from Scratch podcast. We are your hosts, Bianca and Jerry, and today we're going to talk about taxes, our tax experience, and some pointers that we've done in the past.
The following is for informational purposes only and is not financial advice. Please consult a professional before making any financial decisions. For your reference, our full disclaimer will be displayed at the end of the episode.
So, hopefully, this is helpful for you as we are getting closer and closer to the tax deadline. So, I think a big experience for me has been every year we're kind of wait to the last minute to file our taxes. And I think that was fine when we were younger and we didn't really have like a whole lot going on. But I think once we started owning a home, we at that point in time, our advisor was helping us with tax planning. And that was very helpful because I think had it not been for his guidance, we wouldn't have itemized. So, Jerry, do you want to explain to the audience what itemizing is versus the standard deduction?
Yeah, so it's a deduction that reduces your taxable income. For the most part, most people are going to take the standard deduction. However, unless you have certain expenses that are above that, then it makes more sense to itemize. So, good example is like for us, our home, the property taxes that we pay, we can use that to itemize as long as it's above the standard deduction, then it makes more sense because let's just say that we can itemize, $5,000 more than the standard deduction. Well, that's $5,000 less in our taxable income that we have to pay taxes on. So it makes more sense to itemize.
Yeah, so that was what was super helpful for us because it was the first time that we were being shown like the difference between a standard deduction itemizing and getting all our questions answered because it is like another language where you have to learn all these different words and what they mean and what they don't mean. And that can be overwhelming when you're doing it for the first time. It gets easier as you start doing it more and more and you get used to it. But the first time that we did it, it was confusing. So now like what I do with my budgeting tracker, I use Tiller. I track like all our medical expenses in there. I track if we have any donations that we give out. What else? Another thing that I track in there that would be helpful. But I think the biggest one is medical. I
We
think
go to chiropractic, things like that.
yeah, like going to the chiropractor. I don't know if most people know this, but I got braces and then I got veneers in my front four teeth because I had a gummy smile. So I wanted to be more happy with my smile, which it was worth it. But it was a lot of money. It was an investment, definitely. Tracking all of those expenses and making sure that we had enough medical expenses to itemize. So that was really helpful in tracking. And then a big thing that we do too is I'll do like a spring cleaning of like things that we no longer use. And then we take them to Goodwill and then we get a receipt and which shows that we gave donations and we pretty much I put that in a folder where I name it the tax folder for the current year. So for 2026, I already have a folder and I put already receipts of like if we went to the if we paid for a doctor's receipt or if we gave a charitable donation or if we get something in the mail that is for 2026, then I start storing it there. So that way there's just like one spot where you have all of these things that you'll need for your next year's tax filing.
Yeah, and I think it builds good habits because now you are actually able to average it out, because when it comes to tax planning, we got to guesstimate, right? We got to take our best foot forward and guess what we think is going to happen in the year. And so if we have data like that, like, oh, well, we've been tracking how much we spent on, co-pays and things like that. Well, now we can average it out to say, okay, we might be spending this much this year. Um, and that helps with tax planning because now we can figure out, are we going to be itemizing? Are we going to take the standard deduction? And what do we have to do to minimize our taxable income?
Yeah, so those would be some of the tips that we would recommend as you're getting ready for this year's tax season. Maybe you weren't tracking everything and you are now focusing on getting 2025 tax filing done, but there's enough time for 2026 where you can start building those habits now to make it easier for next year and not feel so hectic. And it will get easier year after year. And a lot of people don't really know the difference between tax filing and tax planning. Tax filing is pretty much everything that already happened, and you're pretty much putting it into the tax filing system, and it's going to calculate your tax liability versus tax planning is pretty much the time where you can be proactive and actively do strategies to save on taxes. So, those are the biggest main differences that I honestly didn't know until I got into this industry. And a lot of us always just think about the tax filing like, what is it? How much money am I going to get back? But one of the biggest things that we want to minimize, this is why tax planning is very important. You want to minimize the amount of money that you're giving to the government. You don't want to over give to the government, but you also don't want to under give because then you get penalized for not paying the right amount of taxes.
Withholdings throughout the year.
Sorry, what did you say?
Having enough withholdings throughout the year. I think that's what you're trying to say.
Yeah, just making sure that you're withholding enough, because I was honestly, when we did our first tax filing, we gave right, I think right in the middle of like, we didn't give too much, but we didn't like underpay. I was like, why don't we underpay the government? It's not like they're giving us an interest on all the money they're keeping throughout the year. And yeah, and then that's when Jerry was like, "Oh, because we'll get penalized for underpaying the government. They have this figured out. Like they won't give us
Oh,
the interest if we overpay them, but they will penalize us if we underpay them." So that's one of the main reasons why we are strong advocates for tax planning because it gives us the opportunity to really be proactive with making sure that you're leveraging, not overpaying the government and not underpaying the government, but using enough of your money throughout the year to start investing towards your goals instead of like overpaying and waiting an entire year before you get your money. So, but if you do get some extra money from tax filing, that's also important to like start using for some of your goals. I think for the longest time, we would spend like the whole thing.
a gift from the government or something. Like, oh, I'm getting a refund. Oh, this is great. But it's really you giving your money, they're giving your money back to you that you gave them throughout the year. So it was always your money to begin with. It's not like it's coming from the government and it's now just something new to you, right? It was always yours. You just gave it to them for a few months and now they're giving it back. But no, most people see it as like, oh, this is a gift. Now this is extra money that I get to use for something else, right? But they don't really put it two and two together that no, you actually worked for that money. You had to go work at a job to do that.
Yeah, even like recently, when I use my niece as an example, I think she was saying that she got conflicting advice about like one tax preparer was saying like, "Oh, it's not worth for you to file a tax return. You're still a dependent with your parent." And then another tax filing, no, no, no. Actually, why don't you tell the story? I think because you were there.
Yeah. So she's a college student, still dependent with her mom and her dad. And she also works pretty much almost a full-time job, almost 40 hours a week. And I quickly realized, hey, you actually made a good amount of money. Um, I'm like, and you also withheld a lot of money. So I'm like, so I get it that they're telling you you don't need a file. And I'm like, that's partially true. But the other part is that you over withheld. So you should get that money back. So you should file. Even though you're going to state that you're still a dependent under your parents, you still need to get your refund back. And so that's why she had two conflicting arguments, because one preparer was telling her that she didn't need to file, versus when I saw her pay stub, I'm like, no, you should, because you over withheld. And then they moved to another tax preparer, and they were like, oh yeah, you need to file because you need to get your money back. And that's a common trend. You know, that's the other thing, that sometimes people are like, I'm not going to file because I don't care. I'm like, yeah, but you probably could get some money back. I mean, one, you have to file, it's legally obligated, right? But for two, it's like you can get that money back that you gave the government for free.
Yeah, and I think that was a perfect example. That's definitely like money at the door that is being left. And that money can be helpful for some of her other goals. Like she's a college student. So obviously, any money is helpful at that point rather than basically not having anything in return from all the hard work that you've been putting in into these hours at work. So, and some people like to get these big tax refunds and feel good about them. But I think one of the things that you always advocate, I try to advocate, is that this is still your money. It's not something that the government is gifting you just because they're being generous. Like, this is money that was proactively being taken away throughout the year and eventually will get back to you if you overpaid. And so I think one of the biggest things that you did for one of our clients was that you calculated the tax and made sure that they didn't overpaid, but they also didn't underpaid so that they can leverage that money and invest it into the market and making sure that it helped leverage their retirement plan, right?
I mean, it doesn't have to go to the market. It doesn't have to go to retirement. It can just be savings. I think the goal is that it's long as the money is earning the risk-free rate of the market today, which the risk-free rate is usually what high yield savings accounts and money market accounts are paying, because that's essentially what the market deems as, this is the amount of interest that we can pay with no risk. So
Yeah.
I would say at the very least, you want to earn that. You don't have to invest it in the market. You don't have to do all this crazy stuff, but as long as you're earning that risk-free rate, because that's still money that you can help um, help compound, especially with what's going on in the world and in the economy right now, where our dollar is devaluing pretty rapidly. So your purchasing power is taking a hit.
Right. It's
So
better.
I guess now that I dive into that, that's really what tax planning is all about. It's taking a holistic approach of your situation and making sure that we're taking advantage of every area that we can. It's not just so much to reduce the taxes. Obviously, that is a big proponent, right? But it's also making sure that we're doing our due diligence with your money at the right time,
What do you mean by that?
making sure that we're saving it or investing it properly,
Mm.
because your purchasing power is going down.
Mm.
And then because they're not going to give you any interest, they're not going to pay you anything in return for over withholding. So that means the $1,800 that you got back are worth much less today than they were January 1st of 2025.
Yeah, it's better to start it earning some type of interest rather it continue to devalue. Yeah, and I agree. Yeah, definitely. Um, these are all adult moves that I wish we didn't really have to take care of because it's just, but it's part of life. It's part of a responsibility that we have to take on as part of a society. So I think it's definitely important to bring more advocacy towards understanding what it really means to get a tax refund and what tax planning is, like making sure that you're making your money work for you. That's really what it is, essentially, if you summarize it. These are just some of the pointers that we have learned as professionals in the wealth management industry, learning what other high net worth individuals are doing to strategically keep more of their money. And now we get to do that with our clients. And I think it's exciting to see and pay it forward because someone did it for us as high income earners. We didn't know like a lot of these different tax advantage accounts could help us save more money and save more money on taxes. So it's definitely been helpful to see how all of this helped us achieve our goals faster. And so I think if you have any questions about tax season, definitely feel free to send us a DM on Instagram or send us an email. We will go ahead and link our information in the show notes. But I think this pretty much concludes this episode, and tax season is right around the corner, and I hope you get the right amount of money back, not too much, but not too little. Just just enough to to be right. How would you say it, Jerry? Just enough to be okay.
Yeah, I would say just not too much, not too little.
Yeah, not too much, not too little. So, yeah, I think this pretty much concludes our episode today. And thank you so much for listening, and we'll see you next week. Bye.
Confianza Wealth Management is a registered investment advisor in the state of California. Advisory services are only offered to clients or prospective clients where Confianza Wealth Management and its representatives are properly registered or exempt from registration. This video is for informational purposes only and does not constitute individualized advice or a guarantee that you will achieve a desired result. You should consult with an appropriate tax and/or financial advisor for advice specific to your situation. All expressions of opinion reflect the judgment of the host/interviewee on the date of the program and are subject to change. Presented is believed to be factual and up to date, but we do not guarantee its accuracy, and it should not be regarded as a complete analysis of the subjects discussed. Discussion should not be construed as an offer to buy or sell or a solicitation of an offer to buy or sell the investments mentioned. A professional advisor should be consulted before implementing any of the strategies discussed. Investments involve varying degrees of risk, and there can be no assurance that any specific investment or strategy will be suitable or profitable for a client's portfolio. All investment strategies can result in profit or loss.